Welcome to Beyond the Press Release, a production of Agoracom, in which we take the time to interview small-cap CEOs and executives about their recent press releases. With us again today is Jason Allen. He's President and CEO of Virtutone Networks. Now, for those who don't know about the company specializes in commercial-grade voice-over Internet protocol, better known as VoIP, and fax-over Internet protocol, better known as FOIP. Now, that's a lot of lip service there. They've been doing it for more than 7 years. That's a lot of corporate jargon, but where Virtutone is different, where it's more than just lip service, is the company last year did $2.8 million in revenue. This year, first quarter, it did $3.4 million in revenue. That growth has become astronomical because this past month, they just announced for the month of December, $8.45 million in revenue for 1 month. Jason, welcome to the show.
Hi, George. Thanks for having me back.
Jason, I don't know what to say. Last time we spoke, you were on a run rate of about $3 to $3.5 million a month, and we thought that was phenomenal given the numbers you put up in the previous year. Month of December, you put up $8.45 million in revenues. Congratulations, first of all. That was another record-breaking month. In that press release, you said we had a great year in 2013. Looking forward to even better year in 2013. Let's first talk about how did you get to that number in 2013? What did the company do to ramp up its growth?
Really, the solution that we came to was focus. We focused on wholesale VoIP, and that's buying and selling long-distance international minutes. Not only just focus on wholesale VoIP, we focused on key markets. We got out of the North American minutes. We focused on Latin America, Spain, Africa. Higher revenue. Yeah, higher per minute charges equals higher revenues and higher margin. You make the same amount of margin whether you're making it on a 30-cent route to Gambia, or you're making it on a 3-cent route to Mexico, or a third of a cent route to anywhere in the United States or Canada.
So commercial, for everyone who's new to the story, and there are a lot of people that are new to the story because your stock price has been appreciating and a lot more volume there, so there could be a lot of people watching this. How do you differentiate commercial from retail VoIP?
So actually in September, we sold off our retail division completely. So not only did we just refocus, we actually sold it, got rid of it. We cut our overhead for our retail. A lot of people think retail has higher margin than wholesale, but what they don't realize running a retail VoIP company is that, yes, it's higher margin, but you have so much higher cost associated with that. And when you're trying to compete with guys like Shaw, Primus, Vonage, these guys have multi-million and billion-dollar marketing budgets, and as a small-cap company, we just don't have that access to that kind of capital to compete with those big boys. The marketing dollars is what it takes to get in front of the retail public, and so we looked at what we had, what we were good at, our niche markets that we had available to us, and really focused on that and cut everything else. And that's how we've been able to really streamline our operation and be able to go through this amount of growth.
So on the retail side, a typical customer profile would be someone like me. I want to sign for $9.99 a month with a Vonage or whatever the case is. You're not going after that. Give everyone out there what the profile is of a commercial wholesale kind of customer, what they look like.
So the commercial wholesale customer is guys like TELUS, Bell, AT&T, Gambia, Gamcell, Guatemala, Comcell, Tigo, a lot of companies you've never heard of from in North America, other than AT&T, TELUS, Bell, etc., etc. But what we do is we get in between the big guys like TELUS and the little guys like Guatemala, Comcell, like Gambia, Gamcell, Ghana, NTN. Little countries, little telephone companies, local companies in there that you've never heard of. And the big companies don't have time or the effort or the flexibility, let's say, to go and make those connections. So we serve a niche kind of sitting in the middle between the little guys and the big guys.
Now I'm going to talk about that quote about growth in 2014 in a minute as far as your specific plans. But overall, in the VoIP space, safe to assume that space is only going to grow more and more as people rely more and more on technology to make their calls as opposed to the good old-fashioned cellular network or even the handsets, if anyone still has one?
Well, not only by doing what we're doing in the wholesale VoIP commercial space, not only are we buying and selling and trading VoIP minutes, but we're also trading the same minutes you make a call from your local landline. So let's say
Right.
you have a Bell phone there in your office in Toronto. You pick up the phone and you call a company or a country, a friend of yours in Guatemala. That call is going to go over a VoIP connection, either us or a company like us, one way or another. The big boys, like I said, Bell and Telus, don't have all those connections to those small countries, where guys like us do.
And that's something I really love about your business. Sponsor the show or not, real products, real customers, real revenues, and growth is in front of you. So now it's just a matter of execution. Part of that growth has been organic, but part of that growth has also been acquisitions. And in December, you announced the acquisition of a customer base and new revenues. And this was unique because what you did was you purchased 5 underlying customers of your largest customer. Explain that to us, and then explain how that's contributed to even more revenue for the company and more margin.
Well, there's really a twofold purpose for that. One is pure diversification of risk, right? If we have all your, our largest customer was approximately 80% of our revenues. So by buying that customer or that customer base, we diversified that risk into their underlying customers of 5 major. Now they've become our 5 major customers.
Right.
Our goal as a company is to have no one company more than 25% of our revenues, and that's what we were able to accomplish with that. The second item there is that obviously by buying that customer with shares, it increased our margins, right? That's, at the end of the day, that's what we're after is margins. So many tech companies just focus on growth and revenue. We're bottom line kind of guys. It's what goes into the shoebox and what comes out of the shoebox at the end of the day. And that's what we're focused on, and that's what gave us a bump in margins. And it also was able to increase our revenues and hence margins by about about $1.5 million in revenue, which translates down to 4 to 5% on the bottom line.
And I got to give you and your management team some pretty great credit here, because you made that acquisition happen by issuing 1 million shares, which in essence deemed value of $370,000. How are you able to pull out that? That's a pretty sweet deal for the amount of revenue and profit you picked up. How are you able to negotiate something like that?
We were well. That's what we're here to do, right? Is we're to make the best possible deal we can for our shareholders, and it was a unique opportunity. They were looking to get out and join us, so part of their management came as a part. It came with us, and it allows them to grow as well, right? So it was a synergistic acquisition, and made a lot of sense for both of us. And these guys got some shares, and it's working well.
Well, it's great third-party validation when your biggest customer wants to become part of you that way and have some people join you and take on stock and equity. So I think that says a lot, and that's great third-party validation. Back in November, you raised about $1.4 million, and then immediately in December, you announced this massive increase in your monthly revenue to $8 million plus. Is there a correlation there?
Yeah, there is. So what I've been telling the street is the more money, we're really a financial business, if you look at it that way, because the more money in working capital that we have, the more revenue and hence margin we can do. So we're floating along at about $4 million run rate per month. We brought in $1.4 million net, 1.5 gross, and we essentially doubled our revenues with that. So we turned that 1.5. Now there's about $1.5 million into with the acquisition. So then 3.5. We took 1.5 and turned it into 3.5 million. Actually, just over 3.5 million in 1 month. So, I keep telling the street this is what we can do with capital, and we did it. We're not the kind of guys to go out there and throw out great big projections. We're the kind of guys to say, hey, give us a little bit and we'll show you what we can do with it, and that's exactly what we did in December.
And is that just a matter of more hardware, more connections at the end of the day, putting that money to immediate use?
So what's happened over the last year is we've been doing a really good job for our big customers. The big guys that I keep talking about. So they keep coming back to us and wanting to do more and more and more. But with when you're talking about customers like AT&T and TELUS, they want to pay you on 30-day terms, right? So 30 net 30 kind of terms. Whereas the small company or small telephone companies in these remote countries, they want to get paid either prepaid or every week or every 7 days. So that requires working capital, and hence the more working capital we have, the more business we can do. Where we sit today, we have no lack of business. We've got these big guys pushing us, saying, "Hey, you're doing a great job for us. We don't want to send you $100,000 a day. We want to send you, triple that." And we're saying, sorry, I can't take the business. It's kind of an odd position to be in, actually, but I can't take the business because I can't float the capital. And that's why we've announced on Monday that we're actually doing another equity raise of up to $4 million.
So again, it's safe there to assume that two things: the people, I'm assuming that some people, at least that part of the initial equity raise, are part of the second one, seeing the immediate impact on the business.
Yeah. So like I just said, we took $1.5 million, we turned that into 3.5 in 1 month. I can't give you a projection, but obviously that's what we're trying to do with the exact same. We're trying to recreate that exact same thing. And like I said a bit ago, we've got more business than we know what to do with. It's just a matter of capitalization of the company.
All right. Well, safe to assume we'll end it off on that note that if you're making this $4 million raise, I'm not going to make any extrapolations, but I'm really looking forward that once this raise closes, see what you're going to be able to do in the months following with that money. And no doubt about, we want to have you back on here the next 60 days at most, have you back on here revisiting this, because the growth you've gone through, and I have to give you and your management team an incredible amount of credit, has been astonishing, especially in a small cap space where it's been very difficult to watch a lot of companies struggle along. And here you are, you're doing 4 times your annual revenue from last year in just 1 month now. So congratulations to you and everybody, and thanks so much for joining us here, taking the time and talking more about the company.
Thanks very much. Myself and my management team couldn't be more excited about what we're about to do here in 2014.
Well, congrats. It's great to watch, and it's even better to anticipate and look forward to what's going to be happening. You've been watching Jason Allen. He's President and CEO of Virtutone Networks. Virtutone trades on the TSX Venture Exchange under the stock symbol VFX. For more information about the company, get to their website or get to Agoracom, where you can see all sorts of great profile information, have great discussions with other shareholders, and get all the information you need on a timely basis. Thanks for joining us. Have a great day. See you again next time.